Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you, as we always are, on Monday nights at 9 p.m. Eastern, 7 p.m. over here in WA, or whatever time it is, wherever you're watching. Let me know. Let me know where you're watching from tonight. Tonight, we're going to talk about markets. We're going to talk about what's been happening and maybe what might happen next week. We'll do that after we talk about the disclaimer, which says that everything is going to be general in nature and has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it very carefully or seek the help of a financial professional to determine its appropriateness for you. Of course, trading is risky, investing is risky. You could lose money. You're probably going to lose money at some stage. Be aware that that can happen. It will happen. It's always you who's responsible for the stuff you do with your money, not me. Apart from that, of course, let's get into the nitty-gritty of tonight's presentation. You'll ask questions. I'll try to answer them, contribute in any way you see fit. Let's have some fun. Ask me about stocks, commodities, bonds, crypto, indices, or anything about trading. We've got a really neat question about support and resistance, or points of supply and points of demand coming up tonight. But while those requests are coming through, as I usually do at the beginning of these sessions, let's quickly do our risk management model. And last week and the week before, we've had two sessions since I'm back from a holiday. Both occasions we set full risk position, FRP. Last week we got a little bit cautious, didn't we? We said maybe don't be so eager to enter new trades. Maybe be a little bit more circumspect about the trades that you're in, tighten stops, be more aggressive at not finding exits they're either there or they're not, but applying the rules. And of course, maybe look for some short side exposure. Why did we do that? Well, if we go back, we had that candle, that big black supply side candle, gap up on the open. We had some great earnings from Meta, some great earnings from Apple. Markets got so excited, new all-time high, which is what they like to do in a bull market. But I think after that, we had some poor data out. I think that was at the night that President Trump also sacked the BLS chairman. I think that was the next night, wasn't it? So we had some shenanigans, is what I like to call them, and it created. What does that mean? What do those shenanigans mean? It created excess supply in the market. Excess supply gives us big black candles, gaps down, closes on the low, that sort of stuff. Now, if you look at the volume on those 2 days, it wasn't all that sinister, was it? About average on that day and a little bit below average on that day. So nothing, not remember what we said, the baby's still in the bath water. There's a little bit less water in the bath. And I think the reason why I'm harping on about this is I think you have to have this sort of a mindset in a bull market that, look, more often than not, things are going to be okay, even if you're going to get some stuff that looks bad from time to time. And then look at that Monday, that's Monday. Big white candle, Tuesday, big black candle, yes, but then a white candle, a black candle, and a white candle, the old zebra pattern, to put us pretty much back where all that fuss started. And here we are scratching our heads going, oh, well, what was that all about? But the underlying theme remained the whole time FRP, didn't it? And that's the key. A lot more than just that big black candle has to happen to push us off a risk level, and I think that's a good thing in a bull market. We'll take precautionary steps. We might get a little bit more conservative, but we're staying the course here, and that's still the message today. Moving on, let's do the Aussie market very quickly. So if for your US portfolios, full risk position, and I don't think you need to be that cautious anymore. It's up to you. Aussie market never flinched. It's been amazing. As you know, I've renamed it from the old tin pot market, because it really is a tin pot market, let's face it. A few big banks, a few big resources, a couple of supermarkets, and Wesfarmers and Telstra. It's now the Golden Le Creuset. Tin pot no more, Golden Le Creuset for the ASX 200, and it just looks amazing. It is a picture of absolute demand side control, and that means we should be nothing but positive towards it. And FRP. Now, given we're FRP in both jurisdictions, is there something that can push us off this idea? And let's do the whip around the grounds. We'll head over to the Russell 2000, and I'm a little bit surprised. Hey, I haven't looked at this since Monday, probably just like you. I thought it would look better than that, given the Nasdaq's had such a big rally, but it hasn't, and that's got to just nag away a little bit at your confidence, doesn't it? The heart of corporate America is struggling. Hey, it's not at a record high. That's the first thing you'll notice. And you'd almost say there's equilibrium certainly. But I was going to say with all these black candles, an inkling of supply side control. That's surprising. Is it enough to push us off our risk position? I don't think so. But it's certainly got my attention. Let's head over to Europe. We want coordinated risk on. We want risk-seeking behaviour across the board. Neither here nor there on the CAC. The DAX is recovered. That's good. That doesn't look too bad. The Euro Stoxx 50 is going to be influenced by both of those, of course. The FTSE still looks very, very strong. The IBEX, that looks very, very good indeed. So happy with those, or at least nothing too sinister there. Nothing sinister here. Nothing sinister there. In fact, that's starting to look pretty good again for risk on the Nikkei. Not ideal there for the Nifty 50, but not pushing us off our risk position, and actually very, very encouraging on the two major US bourses that we look at. The first one more so than the second. In terms of the places to stick your money in the local market, that took a bit of a hit today because of the JB Hi-Fi result. Not that it was a bad result. In fact, it was a very, very good result. Just that maybe markets were expecting it to be a very, 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 very good result. But the fund manager I spoke to today seemed pretty happy with it all, and he knows the fundamentals. What do I know? I just know the chart. So he wasn't too fussed about it, so I don't think I am either. But we'll look at the chart. We will look at the chart later on, but that's why that was down a little bit. Otherwise, the trend is exemplary there, and it's looking very, very good here in the energy sector. I can't believe I'm saying that, because a couple of months ago it was looking absolutely horrendous, but trends change, and certainly we're starting to see several big energy stocks and small energy stocks now creeping into those chart watch long scans also, so that's good. Financials neither here nor there, but more of an equilibrium market. I've said that for a while. Gold is having a bit of a resurgence. I think it's got some legs here actually, and it surprised me. Healthcare not looking as good, but still okay. IT, okay, not great. Materials, that's the big one, isn't it? That has knocked everybody's socks off, and starting to look the real deal now on test and hold of that long-term trend ribbon. So that's trend change. So we've got a new long-term uptrend in place. It's still fledgling, of course. We're still turning the corner, but it's technically a new long-term uptrend there on the resources. That'll make a few people happy. It makes me a little bit confused, but it'll make a few people happy. But yes, several resource companies creeping into those scans as well, because they are completely unbiased. Property's still very good. Staples neither here nor there. Telecommunications still fine. You can see I'm rushing. Utilities is fine. Because I obviously want to get to your questions tonight. The base metals, if the world is a wonderful place, and hey, all those resources are going gangbusters, aren't they? So resources, commodities should be going up. Aluminium, bit flat. Copper, not great. Iron ore we'll look at in a second. Nickel looks terrible. Lead looks pretty awful. Tin looks okay. And zinc looks neither here nor there. So not getting any signals from there, but we are getting a bit of a signal from here, which is the price of lithium carbonate. And we'll switch back to our candles. Not that you'll see the last candle. I'll have to zoom in for you so you can see it in that pink zone. There's just a dash. And that's because today on the GFEX exchange in China, we had a limit up move, though 8% on a settlement basis there to close, causes them to pause trading, 38,000 contracts traded, and that was it for the day, and closed with that open high low at the same price. Importantly, it is above that 80400. Is the long-term trend ribbon acting as a zone of demand? Not really, but I think we can start to talk, well, certainly I've declared the bear market's over. I think we know that much, but is it a new bull market? It's starting to look that way. How much this bull market's going to go up? I'm a bit of a skeptic, but it won't stop me from putting the stocks in if they meet the criteria, because it's not like you can trade what we're seeing on screen anyway. You're going to do it through the stocks. But it looks pretty constructive. What would make me more confident? Yes, well, absolutely. We need to see any sort of dink, and that would be very, very helpful for me and making me feel better about it. Of course, it might not dink. It might just keep going straight up, and I've already told you that it is looking very constructive. So either way, read between the lines, it's looking very constructive. A surprise to me, but that doesn't matter, does it? It's going to do what it's going to do, and we call it as we see it. Let's head over to the... a few people chuckling behind their muted microphones over there, no doubt. We're going to start with, why don't we start with Bitcoin over here? It's starting to look pretty good again. It's having seeing a little bit of supply there. At a logical place to see it, 123,182. So that upper shadow is I don't think anything sinister at this stage. If it turns into a proper upper shadow and supply side candle, you'd take a little bit more notice of it. But otherwise, yesterday's close is still the one we're watching, and that's very strong. 11,982 is matching up roughly. Well, in fact, it's above 111,966. Too many numbers in this Bitcoin price now, isn't it? So that's all very good. And otherwise, long-term trend, short-term trend looks very much intact. Price action half decent beneath 123, 182, a little bit of compression, but it's fine. Candles look okay. So I'm pretty happy with that. Can't see any reason why, if you're long, you wouldn't stay that way. FRP. And on Ethereum as well, we had a question about this last week, and off the top of my head, I think I said it's looking better than Bitcoin, quote unquote, and it is still looking better than Bitcoin. So happy with both of those. We were in the process of looking at some commodities, heading over to silver. Look, not terrible trends, but not all that exciting either. Oh, I skipped platinum. Let's have a look at platinum. That doesn't look all that exciting either. Neither does palladium and gold. I still think that's equilibrium there, but we've seen that gold sector pop up, haven't we? I still think that's equilibrium though. Heading over to copper, and that one is stuck, unfortunately, because of those trade drivers, trade fundamentals. Iron ore is looking half decent. How about that? Helping a stock like Fortescue be in the scan list for what was in all last week, I'm pretty sure. And Mineras also making a reappearance in the uptrends scan list. Uranium stuck in the middle. I've written about a potential resumption of the long-term downtrend there, and there's been nothing in the last 5 days worth of trading to suggest otherwise. Looking at natural gas, those are trending lower. Heading to the crude oils, stuck roughly in the middle there. Both of those, we're seeing some gradual appreciation on thermal coal, but far more noticeable appreciation there on coking coal, and that is catching some of those anti-involution tailwinds. And hopefully you've researched that, but I did write an article during the week on lithium, which discussed the concept of anti-involution in detail. Funny how these catchwords become catchwords, isn't it? Before I left on the holiday, there was no mention of anti-involution, and then I was blissfully ignorant. I can promise you, apart from those 3 posts I put on Twitter for a bit of fun, I was blissfully ignorant. So it was interesting to come back and see how much things had bloody well changed. All right, that's the whip around the ground. Actually, let's do the bonds very quickly. How can we forget bonds? We've got to do the bonds. The price of money is all important. And on that front, we'll start with US 10s. Fortunately, nothing really bad is happening. No, nothing bad is happening there. And the 2s obviously staying down. In fact, bouncing a little, and that's okay too. And that's bliss. That's why stocks can go up, because nothing interesting is happening in the bond market. So we've got a little bit of a clear run there. Okay, let's head over to your requests. I do have, I'm not sure if I got to this last week, so I want to get to it today. And it's a couple of requests for Mark. So Mark, if I forgot you last week, I apologise. So let me do your Alkane this week. It did pop up in the list during the week. I reckon I even might have featured it on that day there or that day there, if I'm not mistaken. And we're looking at today's candle, so it'll be a feature tomorrow as well. So pretty straightforward on this one. FRP, if you've got it. If you don't, I'm happy to go plus 1/3. There's no need to wait for any other candle, because that last candle is about as demand side control as you can get. And with the short-term trend in place, long-term uptrend in place, a nice little one of those turnaround continuation setups, we call them, don't those hybrid setups off the long-term uptrend ribbon. And we do note, it's pure coincidence, and I mean this, it is pure coincidence. Please, ladies and gentlemen, do not think otherwise. Do not think that these trend ribbons have some sort of predictive capacity. They don't. If they work, it is absolutely a fluke, I assure you. But as we've all experienced, everybody listening and me speaking tonight, we've all experienced for some bloody reason they do. And it's a good thing. AZY, going here as well. Not as keen on this one. Not to say that it can't do what a lot of those gold stocks have done and pop up and make that turn, but it's just too early for me. So when we see exactly the price action I've just drawn on screen, and the reason why I've drawn it there is I want that interaction with the short-term trend ribbon. I want to see it pop above that. I want to see it pull back to that and then get going again. And for some reason, ladies and gentlemen, I don't know why, but that short-term trend ribbon tends to work pretty well also. So let's just let the system do its job here and not try and be too early or too aggressive. I don't mind missing a bit to be sure that I'm on the run. Otherwise, it's just a wait and see, isn't it? Because we've got that. But the reason why we're going to wait and let the system do its job is because we're worried about not so much that angle there, but more sort of coming down here and maybe doing something like that. We don't want to see that, and that's still the big question mark at this point in time. So the question is, what do we do in terms of a risk perspective? We talked about what will make us add risk to it, but is there a reason to have any risk on this right now? I don't think so. And I think over here, next high close plus 1/3 FRP. I wonder when we did that. Was it after that black one? It's interesting. 18th of the 6th. I can go back and check if it was a Monday. I'm just curious. I want to know for myself. So no, that was a Wednesday, that candle. So we had, if that's Wednesday, we had that candle to look at. So on that candle, we would have said next high close plus 1/3, which I reckon this one qualifies. So if that candle, we said next high close, I reckon that's it. I reckon you would have added risk right at the top there, 100%. My system would have got you adding risk at the top of that trend. And the reason for that is it would have looked like that. And why wouldn't you add risk when it looks like that? I mean, if that's all you know, you're pinning your ears back and you're having a crack. And we know that when stocks look like that, more often than not always, but more often than not, they tend to do pretty well. Or if they stuff around for a while, maybe we get out at a break even, maybe we lose a bit. But then we just suck it up, don't we? We take a little bit of a knock on the chin, maybe sometimes a little bit of a black eye. We just get on with life, and before long, we've got a few stocks that are doing the right thing for us. And it turns out, and it's just pure coincidence, as it always is, that after that we got that candle. But the good news is we know what to do, don't we? When we see that candle, we don't just sit there and go, oh, woe is me. We go, okay, what do I need to do? How do I manage my risk? And a candle like that, in and of itself, I don't think you have to do a whole lot. It certainly got my attention. I know I'm probably in for a bit of frustration here, but I don't know if I'm doing anything yet. You might have a different opinion. You might say, no, Carl, I'm not going to mess around with that one. I'm done. I've got lower peaks. I've got lower troughs. I've broken beneath. Is that a trough though? I don't think that is a trough. That's an inside candle. No, that's an inside candle. So that's more like that. There you go. So you don't even have lower peaks and lower troughs. That's the level there, isn't it? That's the one I think we're really watching, and we're respecting this at this stage. So that's what I think. Hey, what do you think? I don't know. And we get that. Convincing up? No. Convincing down? A bit more convincing down than convincing up, but I still don't think we're doing anything. We know this is going to go down, so hindsight suggests we should have done something, but we don't have reason. That's another reinforcement of the supply that we know is in the system. So now I'm getting to the point where I'm saying, we kind of know where this is headed, right? So I think we can keep that there, but I think we can now add this, can't we? I think we're going to close beneath that shadow. We're confirming this little dink here. That's a third, and then we might keep a half just for the short-term uptrend ribbon. Okay, let's see what happens next. I love these little case studies. I don't know about you, but I enjoy doing them. I don't think it didn't close beneath there. I think we're okay. Oh, I hate these ones for the death by 1,000 cuts. I think let's because we're going to upper shadow as well. I think, don't forget that's way back here. What do you reckon? And I want you to kind of think about what you would do, and if you're not sure about what I'm going to do, I don't think we can leave it any longer. Is that fair to say? I think we've just got to do a little bit. Because overall, I think the trend still looks fine. But let's just scratch that itch, because we've been wanting to do it. We're kicking ourselves for not doing it 3 times already. So let's just scratch the itch. Let's just get a third off the table, and who cares after that? Oh, okay, well, I'm glad I did. Now, I'm not happy, but I'm glad I did. And I know I've got to do that now. There's no question. But see how it goes from. See how there's no question. Like, we've had a few question marks. Remember, it's not a black box system or a black and white system. It's just a common sense system. So we've had a few question marks. We've kind of scratched a bit of an itch, but we know we have to do something now. There's no question now. We have to do something. It's just about how much. That's the only question. Do we do a third or do we do 2/3? And some of you can have an opinion. Oh, look, let's just see if it closes beneath that short-term uptrend ribbon. Some of you go, Carl, I've seen it. I know what happens. It goes down. Just get out the whole lot. That's not a great candle. I think I'm going to anticipate the close beneath the trend ribbon and probably just knock that and just get on with my life, because it's a bull market. There's a bunch of other stuff, and now I'm probably going, I probably should have just kept that third. And I go, oh no, I'm pretty glad I didn't. And I go, but I can always get back in, right? Now I'm going, you know what? There's nothing to see here. Show's over, right? And I think everybody watching and listening is going to have a slightly different, is that fair to say, within 5 cents, different view on the when and the where. But I think every one of us can agree that none of us should have any risk at this stage. And hey, it might go up 1,000 million %, we don't know. And we'll get in if it does, because it'll do some of these things or not. But at the moment, this is what makes me very happy about what I get to do with you every Monday night, is show you some of the stuff I've learned, and maybe the way I go about it is we all agree on this, is like ZRP. And hopefully we can all say ZRP and who cares what happens next. That's the key. That's the hard part. ZRP and who cares what happens next. It's hard. It's hard to not care after you've had that emotional engagement with your stocks. But hey, they're not your girlfriend. They're not your boyfriend. They're not your husband. They're not your wife. So, get over it and move on, I say. Let's get, that was, those two were for Mark. Thanks, Mark, and apologies again if I didn't do them last week when you asked me to. Let's head over to you live people. Hopefully you're still alive and listening. Mineral Resources first up from Francine. How's it looking? I think it's looking really good. I put this one in fairly early. I can't remember exactly which day. It might have been that day. It's certainly that day I put it in. I know I ran it as a feature on that day because I didn't want to miss out if this one kept going, anticipating a little bit what's happening with lithium, and also the iron ore prices I think is looking pretty good. So I needed to have something in there in the feature, and I wanted to broaden out some of the setups as well, because then that's a very valid reason. But you've got to pull that trigger and get some skin in the game at some stage. And no, I certainly didn't pick the low down here. That's impossible for me. But there was potential for some aggressive stuff if you wanted to do it earlier on. Maybe, I don't know. I think around here, when you're getting to the top of the trading range, that's sort of some aggressive stuff, and then there. But yeah, I don't think I could have got in much earlier, because really it was still in the balance through there. It was really still in the balance. Maybe there. That's the candle, isn't it? That's the candle. But you're in that zone then too. So that you live and die by your trend ribbons also. Long story short, Francine, I think it's looking like demand side control. That's the technical term for it, because we have. Let me get rid of some of this stuff now. Let's get rid of that, and let's literally start afresh here on MinRes. We have a short-term uptrend. We have a long-term trend that has, at the very least, transitioned to amber. So what that's telling us is that we've reached equilibrium in the longer term. So go to the shorter term and let the shorter term guide you. And the shorter term trend is up. It's well established. We've got tests and touches telling us that short term trend ribbon is now acting as a zone of dynamic demand. That's a big tick for me. We've got a predominance of demand side candles. Lower shadows, white bodies are in abundance again. Demand side control. And we have dinked in, we have tested, we've done a bit of work in that long-term trend ribbon to tell us it is also transitioning. So certainly, these earlier ones, they're early, they're a little bit riskier. Some people might like them and gravitate towards them. I know some of you do, because you just like that style. But you know what you're getting yourself into. But they're just as valid as any other setup, and therefore FRP for me here. Today it will go in again. Tomorrow. I haven't done the work, and I don't know if I'll do it tonight or get up early to do it tomorrow, but it'll be in tomorrow's list, plus 1/3. If you're looking to add some risk, FRP, if you've got it. That's Min. Look, while we're here, no doubt, the elephant in the room is probably some of these lithium stocks. I'm looking down the list, and surprisingly, very few of you have asked about them. So let's do a little quick whip around. I put IGO in as a feature yesterday, again, just because I want that variety of turnaround. Popped up today, flared a little bit, but otherwise, probably just now waiting for any sort of dink and confirmation. But don't go overboard. It would be my view on this one. Don't go overboard. That looks very good now, doesn't it? And I couldn't. It would have been an aggressive setup for the list, and I don't do aggressive setups in the list. You are more than welcome to take them because you know more about them, but I don't do them in the list. So if you're wondering why PLS might have not been in the list earlier, it's simply because that trend ribbon is still red, and therefore it is not a turnaround setup yet, and it's still not a turnaround setup yet. That's really in the order of magnitude how quickly things have turned here, and that's going to happen. The system won't catch everything, unfortunately, and the system requires us to respect this ribbon, and that's why I haven't been in earlier. But once you do this little dink, it does become an aggressive setup because the ribbon is no longer the limit now, right? So the ribbon's no longer the limit, but it's also not a turnaround setup. So by definition, therefore, what's left, it's an aggressive setup. But if candles, trends, price action, everything else is there, then you're welcome to take it on that basis. So this won't go in tomorrow because this still hasn't turned amber yet. That's how quick things turned around. Liontown is a little bit better in that regard. A double tap, isn't it, of that long-term trend ribbon? So that's further progressed. But Pilbara is the best looking candle there, isn't it? The one with the highest short exposure, I guess. And then you've got the small ones, which honestly, I don't know if I could be bothered looking at. They're going to be various degrees of not as bad as they were, I guess. Stuff like that. PMT, which is not that one, it's that one. Actually, that looks probably one of the better ones out there, to be fair. Vulcan, which is not that one, it's that one. That one is still dead in the water as far as I can see. So a bit of a mixed bag, and you can lament, I guess, not getting the bottom in those, or you can just be happy that there are other turnarounds that are going pretty well. Some of those coals, I think, are turning around nicely also. And then the next stage is just being happy about all that other stuff that's been going up anyway, right? So you don't need to be spotting turnarounds when you can find stuff that's still going up. I'm just picking a couple that have come to mind. Those defence stocks are always very good, aren't they? A couple of days pullback there on ASB. All right, let's get through this list. Adonis, I'll do your US ones at the end as usual. 4DX from David, which has caught my attention today, and again, it was you could have gone aggressive on it sort of here once that long-term trend ribbon is not an issue again. Was there a dink there? Not really. A little bit of an intra dink, but I wouldn't say it's official. So I personally couldn't put it in for that reason. As much as I think that this and that one there is very impressive, and then that's that little dink is very good. So as much as yes, it's really looking the goods on just a few candles very quickly. It's happened too quickly for me to do much about it. But I think with this little pullback here, and again, it's intraday. That is not a peak. That is not a peak because we have a lower high, but we don't have a lower low. This is an inside bar, but it is that sort of little intraday dink, if you could call it, and then that's the strong close. So built into here is this price action that we want to see, that test of the demand side, that supply side response that we crave so much to tell us if something's still got legs. It's so important. Supply side response. The supply still has legs, not the demand side. Right? It's night and day. So this sort of price action is what we want to see. And the reason why we are circumspect around the long-term trend ribbon is we know how powerful it can be. So these are okay, but they're more aggressive. Trade them accordingly. And long story short, I think today's candle is the key one there. So I'm FRP if you've got it, and if you don't, based upon today's candle, I still think it's quite an aggressive entry. That's not supposed to be a half; it's supposed to be a third, obviously. So an interesting one, worth a look, I think, but understand the volatility here. Let's and David talking about that sharp rise. It's a long way above the short-term moving average. It sure is, and now it's also well above the long-term moving average. Hayden's got CAT, which is I was going to say still looking very good, but there you go. I haven't looked at it for a few bars, and it's having a little bit of a pullback. And I wonder, that's the 5th, and that's the 6th, 5th, 4, 1, 4. So that's Monday. So we sort of would have said FRP plus 1/3 on the next demand side candle. That's certainly not a demand side candle, that is, but that kills it. So haven't really had a reason to add any risk since that last look at it on that blue line. And we are worried about this. This does worry me. $7 is not really a big round number, so I'm not too fussed about that. A little bit of volume there, slightly above average, but the candle is more sinister than the volume, that's for sure. So yeah, look, a little bit concerned. I think today's candle is a welcome change from that bit of supply that's come in, but we're mindful that the supply is lurking in the system now. So just watching for any sort of any confirmation that comes in beneath this level. So that's now your key level, and we just want to see the candles how they respond to this. Upper shadows, black bodies in that area from about 640 into sort of 680 is going to be really crucial. And if you see a repeat of this, so if you see that candle again in there, then I wouldn't be mucking around too much. I'd be managing my risk pretty quickly if I saw something like that, and probably more than a third sort of thing. At the moment, I still think we're largely intact though, although these two candles here I think are helpful as well. So this little, some people call them like tweezer bottoms. You can see that little shadows matching up there. So there's a little bit of demand that's come in, and if we were to close beneath today's candle, it would tell me, and really the Friday's candle as well, that demand is gone, and that would also, I think, give me a close beneath the short-term trend ribbon, and I don't think I'd be able to keep going without managing risk after that stage. So I think it's at least a third there. I'm going to go at least minus a third on a close below that low. And I'll let you decide whether it's a third or 2/3. Because there is a little trough in there. I don't know if you noticed. There's a little trough in there, and we've slipped that one as well. And there's a little one in here also. So that they're kind of lining up. So I think, and again, I wish we had a better way to sort of poll everybody at the same time, but I think that's convincing me now to go 2/3 there, and I don't think we want to be any less than that now. Just from, again, it's evidence based. I'm not just making stuff up. Because we've got a point in demand there, we've got another one there. I think we can give it the benefit of the doubt, but we'll just be more aggressive then. So we're giving it the benefit of the doubt, but we're just going to be more aggressive if it doesn't do what we want it to do. That's all. Still FRP though, Hayden. Robert's looking at JBY and RDM. And here's the thing, everybody. If all that other stuff gets going again, there's only so much speculative money slushing around in Australia. So it's got to come from somewhere else. It's got to come from what's been doing really well, isn't it? From no fault of this stuff. It's just that it's a zero. Pardon me. A zero-sum game. Only so many punters to go around. JBY and RDM, James Bay Minerals. There you go. This is one I've seen a few times before. It was looking pretty good not that long ago, but it doesn't look like a whole lot came of it. Hasn't gone down though. It's just sort of just tracking sideways. Look, it's half decent because it's got that. There's actually quite a few white candles in there. So, there's a bit of accumulation going on. To what end is yet to be seen. But I could hold it. If I had it, I could hold it. So I'm FRP. The question I'm trying to, I'm pausing. I'm trying to think, would I add risk here? Look, just give me one candle, and I don't mind missing. It's order of magnitude somewhere between 2 and 5 cents, right? That's what we're talking about. And I know we're greedy. I know we don't want to miss even that. But a white candle that looks like this, there you go. That's the one. And if I see that on some decent volume, then that would get my risk in. But I think it's FRP in the meantime. Looks half decent. RDM is also up for question here. And it's very similar, isn't it? Stuff is going on here. I've got a little bit of interest. The volume could be better though, isn't it? There's a few above average days, but order of magnitude, something like this, maybe at least. Even those aren't that fantastic. So it's a bit ho-hum. And I'm going to go detail on the last one. Look, we're talking about a cent, like, a cent and a half. That sort of thing. Well, it can't go cent and a half anymore, it's above 10. A couple of cents. 2 cents. Give it 2 cents and a decent volume, whack of volume to tell us there's some bloody interest here, and then I could go. But in the meantime, FRP. Look, they don't look terrible, do they? Let's go to, we've got another one here, GNP. Looks magic, can't fault it. There's absolutely nothing in this chart. I know famous last words. I don't want to jinx it because we probably would have said that about Cat and a few others. But it's sheer perfection. It's like one of those US stocks, isn't it? Plus 1/3. If you're looking to add risk on something, that will be a featured chart also for tomorrow. Let's go to James. Has got SMR, which is another one of those potential turnaround plays. Not dissimilar to Yancoal has been on the list. New Hope has been on the list. Whitehaven's also been on the list because they're doing what we want them to do. SMR is a bit more like some of those lithium stocks in that it hasn't really got itself above that long-term trend ribbon. What does that tell you? What does it tell you when the other three have gone and this one's being left behind in terms of which coal stocks, when the fund managers are looking for exposure, where are they going first? Doesn't mean this won't go up. It just means that it's not where they're looking. So I first thing I would say is go with strength. If we are considering this in a vacuum, that is without knowing that the other three existed, then it's starting to look far better. We have dynamic demand there at the short-term trend ribbon. We have a transition here. We've got amber on the long-term trend ribbon. The candles are far more mixed than the others because, we've got these black ones telling us that there's still some supply-side activity there. There's still that downside volatility that's possible. Yes, we've come back strongly. That's good. That's a very good sign. So much like the other ones that we've talked about, yes, I think you could, if you were that way inclined. FRP, if you've got it now, that I can say with confidence. I could even go plus 1/3, but again, that's only if I'm considering this in a vacuum and not knowing that those other three existed as a turnaround setup here. Okay, let's go to CU6. A few of the doggiest dogs are starting to turn around. I think we might have talked about this last week. We've got FRP, and unfortunately, it hasn't worked out this week, has it? And just a little peak there at 5. Little peak there at 5 with those two shadows, and unfortunately, it demonstrates that you just never know on these things. So, wall of black through there. Tough, isn't it? I think I ran it on that day, not as a feature, but definitely made the shortlist. Yeah, I thought it was looking good. That was the day. So disappointing to see that there's your warning, and then there's that, and unfortunately after that, there's not much I can do on this one. Today's candle was very disappointing on a record day for the rest of the market. What FRP? I did not want to write that. No, I think I'm back to ZRP on this one. Or, if you have to, at most plus 1/3. Plus is probably around 1/3 remaining. Is where I'm going, and licking my wounds on that one. I think, unfortunately, for you there, James, disappointing. Al, I think it is got CL, which looks very good. I definitely ran that as a feature on this day here. It's been in the list for a few days. Again, I'm pretty sure it was in the list back in May, so that one's coming pretty good again, and no question on this one, that will also be a feature tomorrow, FRP plus 1/3 if you're looking to allocate risk at this stage. Okay, going to Robert next. And in fact, I missed Ian. Sorry, Ian. CSX. CSX, there we go. Looking very good. I'm guessing it hasn't come up on my scans because of the turnover filter. You can see 0. Okay, so that means it's not meeting my minimum turnover qualifications, which are, I think, about $250,000 on average per day over the last month or so, right? It needs to trade there or thereabouts, which is not a lot of money these days. Now, just because it's not meeting my minimum turnover filter doesn't mean it's a bad stock. It just means it's not meeting my minimum turnover filter. So obviously, if I'm going to be running scans for potentially, lots of people, I'd like to see there's at least a minimum amount of liquidity there for them to trade in. But if it meets the criteria, it meets the criteria, and that is really all you need to know about, because you trade based upon your liquidity considerations, not upon mine. So short-term, long-term trends in place. The reason why I'm zooming out is to see if there's anything sort of really sinister out the back there that might be an issue. And, I can see a little bit of a level through here. And then there's probably a level through there. There's a little one there. But we're getting a whiles ago now. I think if you're still holding on in hope from those times, I think that's a long time ago. And we've got a bit of a ways to go before we get them. Look, I think $1 might be an area where it could take a little bit of a pause, but I don't think anything more sinister of $1 than that. And in the meantime, with perfect price action, just the most dominant demand side showing in the candles and very much intact trends, I can't see any reason why you wouldn't, at this stage, be FRP if you've got it, nor why you wouldn't consider it to add risk if you're looking to add risk. MPK is also looking very good. I think that'll be in tonight's shortlist. Very strong move today. Could have closed a little bit higher, but when you consider the gap and even the supply that was in there on Friday, I think that big turnaround today and some really good volume push, which tells us we've removed a bunch of supply through here. Yeah, I think that's pretty strong. So very happy with that one. FRP, if you've got it, if you're looking to add risk, then certainly you can consider it on the basis of that candle. Going to your third one there, Ian, AEF, which also looks very good. This is one that's come up a few times, hasn't it, in the lists, and very almost very boring, isn't it, over the last few weeks. I don't think there's anything. Oh, there is. Yeah, there's a little bit of history there, but a little bit of supply here. But I don't think that's going to cause too many problems. Certainly up here is more important, but we're miles away from there. So I think this is fine. And again, ditto on the last one, very strong short and long-term trends. I love the steepness of that ascent. Demand side candles, price action. FRP, full risk position, if you've got it, plus 1/3, if you're looking to add some risk. Quite a few of those tonight, not surprising given we're at record highs, I guess. MTM had a little bit of a dodgier day today than we'd like, I think. When did we look at it last? Maybe on that candle there, 1st, 4th, 5th. So 4th is the Monday, so that's that day there. We said FRP, the blue line day. We said next demand side candle. So I haven't actually had that reason to add risk since then. I think, unfortunately, now we're closer to reducing risk probably than adding risk, although the situation is not dire. But there's enough equilibrium or signals of equilibrium here to suggest that we're struggling a little bit with that short-term trend. And we have seen many times that things might come down and have a bit of an interaction with the long-term trend. We don't want to be hanging around too long for that. So, yeah, look, today's candle is concerning. On slightly above average volume as well, telling me that we were heading up in the morning, and it's done it 2 days in a row now. Heading up in the morning and then finding that supply, isn't it? So that's selling into strength. Okay, and that supply is simply reinforcing the supply that was found here, and ultimately here. I think that candle's got a bit to do with it as well. So yeah, tough, I think, to have a full risk position on here. I don't think it warrants it, because we're going to find so many other places that do warrant a full risk position. We've already seen that tonight. The question is whether you go tomorrow on the open, or maybe give it a little bit more time. I'll let you decide on that, but certainly there are some levels here, some clear-cut levels that can help guide us, and certainly could not be a full risk position if we close beneath there. And I think I'm going to lean towards ZRP on a close below here as well. Okay, so a couple levels to watch there. Look, and hope I'm wrong, and tomorrow we've got a nice big white candle, and that short-term trend has continued, but taking a small step and then probably a more aggressive step after that. Let's go to Robert, who's got, actually we're already with Robert, and we've done Robert's first one. Let's do Robert's second one, which is BCA, which obviously today's candle's not ideal. So I should have read the rest of Robert's comment there. He's asking perhaps MTM is minus 2/3. I think it's more a third now, and then it's starting to be more aggressive, on a close beneath some of those other levels. So, but I think your mindset's in the right place. And then BCA minus a third here, and he's looking at that last candle, I'm guessing. I think that's a little bit aggressive. It's just one black candle in an otherwise exemplary trend. It's very solid. Now, if I keep zooming out and I see that 40 cents is the most almighty historical point of supply, I could get with your method of thinking on that, but it's probably closer to 50 than 40, I think, is where the issue is, right? And I know it's a bit of a flexible zone there. You can see those big white candles there, alternating candles. So I'm going to just err on the side of following the trend and say we're still okay. Obviously today's candle's not ideal. We don't want to see it be sort of confirmed with something more sinister like that. We don't want to see that sort of stuff. But in the meantime, I'm going to go FRP, and you can do. I don't need to put anything else, but FRP, and there's really no signals there to do anything just yet. Certainly beneath here, that's a point of no return for some risk off, but there's nothing else. So if there's nothing else, then that means don't do anything, doesn't it? All right, let's go to your last one, Robert, and just for everybody else, maybe don't put any new ones in. So we'll stop there at Perry's just dropped in some US ones, so that's where we'll work our way back up after that. It's got quite a chocker list to go here. LKY, which is, doesn't that make things so much easier when we're looking at these charts and the difference between something that we're not sure about and something that we can just be so sure about. FRP plus 1/3. So yeah, that's been in a few times, hasn't it? LKY, hopefully a few people on that one. Going to MEK, which is more in that equilibrium basket. And these ones that are starting to do this, hopefully many of you have seen, look, you're not missing out on too much if you do let them go. Sometimes we know the story very closely. We might even, dare I say, love the stock a little bit. But even if you just leave it for a while, you're going to keep an eye. You're going to keep an eye on it. If it does start to move and throw in a candle like that. It doesn't have to be vertical when it does it. It's more like this, isn't it? This is the one that got LKY going again. That's one there, right? The one that gets it going again. So if you're holding MEK, you're really just waiting for the one that gets it going again. And if you didn't have any risk on it until then, I think you're probably fine. Now, the question is that the one that gets things going again? It's not bad. It's not bad at all. I'm going to go FRP. Certainly, I think if you've got it, you can hold it. If you don't, I don't think you're rushing into this one just yet because you're waiting for the candle, right? Let's go to, that one was for Ian. Let's go for Roscoe. Hello, Carl the crew. Hi, Ross. ELT. Yeah, very, very thin. I'm guessing this one's not going to make my turnover filter. When I say thin, I can tell because it's got the sort of the blocky little candles and sub-candles that are opening high, low, close, all at the same place. Again, it doesn't mean it's a bad stock. It just means it's not meeting my turnover filter. So you can get days like this. That's, with a big range. How many shares did it trade on that day? 55,400. The low was 155. And it opened at 155, mind you, and then it closed at 175. So as long as you go into these things eyes wide open, I don't mind, but go into them eyes wide open. FRP plus 1/3 if you're looking to add risk, because otherwise there's nothing in there that worries me at all, and there's plenty in there that I like about it. Although I must admit I needed to do this, didn't I? Because that stock, and that somebody's probably telling me a message, I'm looking at the wrong chart. And this is a function of the Norgate data package I've got, which has all the historical charts, which is really great when you're back testing a trading system, but we're not. So I needed to be here. Fortunately for me, the charts are very, very similar. So just rewind the tape when you get it and just play it all back for that chart, okay? FRP plus 1/3. But I don't think this one's got the problem with the liquidity filter. It looks better. And it does. There you go. So that's why that hasn't come up on my list yet, because otherwise it would have. It's not meeting the turnover filter yet. But very good. Very happy with that one. And if you can go back in time to 1999, you can trade the other one as well. Roscoe, let's go to your... we've done LKY for you, Ross, earlier, and I think we've done BCA as well. Also, so fortunately for me, I don't need to do them again. WBT for Michael, and I put it in, didn't I? I put it on this day. I had to. You couldn't really ignore it on that day. Maybe I put it on that day. But this one, I think, will be a little bit touch and go, just on the basis that sometimes it's hard for the leopard to change its spots. Just be careful with this one. I'm not a huge fan. It's done it before, right? Where it's just there's too much latent supply waiting in the system from rather motivated sellers who are far too aggressive for my liking at selling into strength. And when charts look good, they sell into them anyway. And that just smacks of insiders who got in at next to nothing, who don't care so much what the price is. They just want a better price than what it was, or better price than they can get tomorrow and the next day. And you probably know that feeling of, you've been in stocks like this before, where just insiders who their cost base is probably zero order of magnitude compared to us, and they sell into any strength. That last candle is in and of itself enough for me to take some risk off the table. I think at the most, it's probably a two-thirds risk proposition, and really needing a strong demand side candle to right the ship there, or probably moving on to greener pastures. Zip, I think we're going to have a better result, but even then, last couple of days not ideal, but still fine. That's all within trend sort of stuff. And not surprising, we're going to see maybe a little bit of supply coming in around the present level, because there's probably still a bit of that sort of going around. We can't extend that one because it's an arrow, but you can see it's a natural, sensible point to find some supply. But otherwise, everything else looks pretty good. So I think we can just go FRP plus 1/3 on that one. And yeah, just with, look, I had the thought, but it was a thought bubble. But now that I'm looking at some of these charts of these things that ran so hard before some of those resource stocks are starting to run again, my brain is starting to just think, is that other strength starting to just undermine some of these ones that have run so hard? That's all. From whose will BHP coming back, hitting that level. Happy to add risk on this one on that basis. I think if BHP is in the vibration that it makes between 30, I was about to say 40 and 50, and 30 and 50, I think that recent move is sufficient to back it tentatively. FRP if you've got it, plus 1/3 if you don't. If you're that way inclined, like if you are a sucker for punishment, if you love pain, then this is the pain trade for you. Try and ride this thing back to $50, hey? But yeah, the system is a system. System says plus 1/3. A few people enjoying that comment because they know what it feels like. The BHP pain trade. It's a bit like the CSL pain trade. Mesoblast, again, sucked into this one. That's the way I see it, because I've got no choice but to add risk after those. But it is Mesoblast, which is a bit like Weebit Nano. I think you can still have some risk on this, but again, similar to what I said on the other one, not a full risk position. Look, I think you're probably 2/3 RP on this at the most. Where does it get worse? I mean, it's such a strong demand side signal. You've got to think it's got to find some dynamic demand here at the short-term uptrend ribbon, do that pretty quickly. So if it doesn't, I think we're taking... I think you go ZRP on a close beneath the short-term trend ribbon, because I don't think you want to muck around with that either, right? It's a bit flat. Michael's saying he's frustrated. Yeah, this is a little bit of a pain trade as well. So, hi Carl, can I get your thoughts on PNI? I certainly can, which is not that one, it's that one. Yeah, see a couple of these really strong stocks just pulling back now. We're seeing just that the market rotating a little bit, but still strong. I don't put this one in the category of Mesoblast or Weebit. No, this is if there's a good trend there, trust this one, and a bit of a pullback. But the damage that's been done really has only done the damage of that motive candle there. We're still hovering above that old point of supply, should actually point of demand. I think we'll get a signal tomorrow, being Tuesday and Wednesday. You'll see some interaction with this area, and hopefully some lower shadows put in, some white candles and bouncing off there. We'll just see that, and I think we're okay. If we don't, then just see how we go around the short-term trend ribbon. Just give it a few more candles, I think, on this one. I think we're still okay. I'm surprised to see this, given the strength in the broader market, but also at the same time, there's a few things starting to make sense here about if resources are going, they're gonna just take the wind out of some of the other stuff that was going before them. ABB, which is that one, that still looks strong. Again, geez, I'm saying ditto on a few of these, aren't I? Not too concerned about that. I don't want to see it close beneath there, but I think it's fine in the meantime. So I wish I could give you... I don't have a crystal ball, unfortunately. I can't tell you what's going to happen next, but all I can say is that the supply, or the extent of supply we're seeing, is moderate compared to the demand that preceded it, the excess demand that preceded it. So the only logic... all I'm doing is just telling you the logical conclusion from those candles, isn't it? I'm probably not telling you anything that you didn't know before you asked the question, which is good in a way too. AMP, a bit of a mystery for me today. As soon as I saw that candle, I thought maybe it paid a dividend, and I checked it and it didn't. It goes ex-dividend on the 21st. So I don't know what that's all about. I do know that some of those insurance stocks, not that this is really an insurance stock anymore, but like a QBE, so that's some of that move as well through these stocks. But it also hit IAG, it hit Suncorp, which is that one there. So that's turned. So again, this is sector rotation stuff. I've no doubt about it. And that's not a great candle, because the problem is how good the candle was before it, and to get that, we've now got a bunch of people stuck on the long side, which is, probably some people that are listening. Am I allowed to say I don't know what to do? Is that an option for me? Or do I have to tell you what to do on every single chart? Because I don't know what to do with that one. The best way to explain this is my head is saying FRP, and my heart is saying minus a third, because I don't like the candle. So let me go. Or minus a third. I'll let you decide. But I don't have the definitive answer every time, unfortunately. Let's go to, well, Sue's saying, thinking of taking a third, as Friday and today's candle wasn't good on all of those. Yep. XYZ is another one. What happened with that? So reported earnings on Friday, well received over here, and then in New York got absolutely smashed. I don't know. They liked it here, they hated it there. So it leaves me with an I don't know as well, because let's face it, those candles are a bloody mystery right there. Let me zoom in and just enjoy them for what they are, which is a bloody mystery. Coming back, nice little double tap of the short-term uptrend ribbon, push off there, beautiful gap, run, high close. For me, I'm with you. So I thought that was the best looking chart on the day, to be fair, and on double the average volume, and then opens in New York and then gets smacked. So I don't know. It closed well today. I think you can give it some more time, but we also, I think, have a very solid level beneath there. If it closes beneath there, then it would be ZRP for me. But you can give it maybe a few more candles to see if we can get a better exit price, perhaps, is what this one's become, unfortunately. But I don't have a definitive answer on that. I was going pretty well up to that point, I think. I've had plenty of definitive answers tonight, to be fair. Definitive answer here, thank goodness for that. I like definitive answer stocks because that one is a picture of absolute demand side control, and it's an FRP for me, and it's a plus 130 if you don't have risk and you're looking to add some risk. Let me go to the weekly chart, and there's nothing else there either, so I'm absolutely certain about that one. Thanks for those to Nicola, especially the last one. DTR is starting to look good again. Happy with that. Not as good as some of the other ones we've seen, but certainly enough for me to go FRP. Haven't written this again. So I don't think today's a clear demand side candle. It's not a bad candle at all, but plus 1/3 on the next demand side candle as you see it. So happy with that one for Peter. And ENR is another one. There's a turnaround play. I agree with you, yes. Today's candle's not ideal, but hopefully what we're seeing here is the beginning of a little dink, and pretty soon we get that little continuation, and then on that continuation, that's when I think it becomes a plus 1/3. But in the meantime, yeah, I'm happy to go FRP on that one. Looks interesting. Volume, look, it's a couple of above average days, but they're not spectacular, are they? They're not like that one there or that one there. In fact, it doesn't do a lot of volume, this one, so that's a bit odd. And your third one there is waiting for a dink. Exactly, that's what I think too. And WIN, which is not that one, but not that one, and it's that one. So this is the third iteration of WIN, and you would think that it could get it right, but it's one of those ones, isn't it, that just bump along the bottom endlessly until eventually maybe their time comes. Maybe. It's a bit early for me. I think you know why, Peter. But yeah, worth a look. Keep an eye on it. You know what it needs to do. It's showing some inkling of doing it. A little bit of interest there in the volume you can see at the end there. So worth watching, let's say. But there's no risk. Not getting any risk from me just yet. I think that's obviously mentioned it's an aggressive setup. NVU, which I still think looks very, very good there for you, Al. I think that's Al, not AI, but it's hard to tell. Happy with that one. No questions asked for me. Still FRP. And today's candle's not strong enough in and of itself to add risk, but it's very, very close. So I'm just going to stick with plus 1/3 on the next demand side candle. Today's candle is just not quite there. Next demand side candle. So that is one that would make the general list tonight. but not the feature chart, for example. Let's go to Andrew, who's got TSO, which is Tesoro Gold, if I'm not mistaken. It is indeed. A bit of a base pattern there. We should always go back to our default zoom. Look, it's okay, and there's some interest coming in at the end. That's important, but geez, it's sketchy, and it has a history of being sketchy, and an eternal history of being sketchy. And you can see the last time we looked at it, I said, okay, it probably looks okay. Actually, it was a little bit cleaner back then, wasn't it? But even so, it just went back. The leopards cannot change its spots. It just went back to being what it is. And my guess is there's a pile of paper out there. There's probably so many shares on Tesoro Gold. I'm guessing it's been around for a while. Yep, it has. So that's a lot of paper that it's printed over that time to ensure that directors can still drive the latest model BMW 7 Series. Let's go to... We're nearly there, everybody. You can probably sense the fatigue in my voice. I'm sure you're still bouncing off the walls. So BHP's going to $100, says Robert. Yeah, right. Let's get it to 50 first. And if in doubt, stay up, says Adonis. I agree. Hi, Carl, ART, RKN, and then we're heading back up in about 30 seconds, I can assure you, to do the US ones. I'm glad I looked at this one, though, because I'm very happy with that one. It's not meeting my turnover filter, which is frustrating because it means I'm not going to see it in for tomorrow's scan, but I can assure you if I did, it would be FRP plus 1/3 if you are looking for risk. That's my favourite chart tonight. Look, a little bit of supply up there at 50. It might be only in for a small vibration, but it looks very, very solid from here. Let's go to RKN for your next one. Both those sort of software as a service stocks, aren't they? RKN looks very good. Also not meeting my minimum turnover filter, so a little bit more on the obscure side. Again, it's had a history of disappointment. But this could be the time, couldn't it? This could be the one. FRP plus 1/3. I don't mind going for these at all. Don't get me wrong. It's just having a little swing at them. Instead of trying to hit it big on one big trade, just chopping it up and spreading the risk and having a few of these little setups going here and adding to them as they need to. See which watch garden bloom, right? Ones that bloom, feed them more. Fertilizer, and the weeds pull them out. Okay, we're heading back up to the top now with US stocks. So we're going to go back to our trading view screen and put our candles back on and going up, starting with Matthew's picks here. GCT, GigaCloud Technology, what a great name, and beautiful gap and run there. And we can see how sometimes these things work out, don't they? We waited at stop on the day. Not that there was a huge supply side showing there, but that was as much as it could achieve on the day. It was getting back to that point of supply, 30 sort of lurking around there. And if we zoom out, let's just see where the next level is. Not really. Oh, look, there's at 34. I think there'll be a little bit, but the big show here is in 40 to 45. So on that basis, I think we're okay. That's a little close because I guess you could look. You wouldn't still want to have a full risk position beneath Friday's low, would you, Matthew? So if we're talking about how we can measure reward to risk, the first thing is to see, well, where's our potential point of supply? I mean, we've done that, so we'll go here. Is our potential point of supply, and we know our entry levels about here, and we would manage our risk beneath there. We'd be in trouble if we were to close there. So do we have one? Well, I think we do on that basis. Yeah, I think we're okay. And therefore, can't see the reason. Obviously, if you've got an FRP, that goes without saying. If you're looking to add risk, then I think you can consider this one. Also, we'll click save on that one. Very interesting looking turnaround setup there. And we'll go to WLDN, which is Matthew's second one. Which is not coincidentally the same candle, but definitely not a turnaround setup on this one. Let me fix that. Sorry, do that. And I was heading over here to do the zoom out. Nothing at all there, so happy with that one. And I know many of you will struggle to buy that because it's gone up so much, but it's the opposite. You really need to have it in your field of view for that exact reason. Save and plus 1/3 on that one. If you're looking for risk, it 100% should be in your field of view. Okay, Matthew's got great case study earlier, and I didn't do your case study. Who was that sent me that? Oh gosh, who sent it to me? I have to look it up. Oh, I didn't write your name down, but I will do it before we go. You're probably watching the recording. Is it Neil? No, not Neil. Oh man, I'm sorry. I need to know who this was. I should have written it down. Was it Lee? Alan. There you go. Alan. Okay, Alan. If you're listening, I'm going to do yours. Hey, where's the Chrome gone? Oh, because I changed screens. Don't worry, it'll come back. There you go. Okay, Alan. I'm going to do your RRL in a second. But that comment that you just made there, Matthew, about the case study, that jogged my memory. So thanks for that. So let's go to VECO. Which is a bit early, but it's an aggressive setup. So yes, as an aggressive setup, and only because of these two candles, because it doesn't have the price action, right? It's missing a bunch of stuff, even for an aggressive setup. So it's an ultra aggressive setup. Look, for me, I could happily pass on it and just get on with my life. I'll be honest with you. But if it's a stock that you're interested in, there's something about it that you're really attracted to. It's an aggressive setup on the basis that we're in the ribbon, right? The ribbon hasn't changed color, but because we're in the ribbon, we're in the top half of the ribbon. We've got a nice white candle, right? You can see where I'm going with this. The ribbon is not the barrier anymore, right? So we don't have to say, well, can we make the reward to risk into the ribbon? Okay, so forget the ribbons there now and look up and say, well, where's the next point of supply? There's a little bit here. I'm not too worried about those. Clearly, these are the two here, right? That one, a little bit that one, and sort of coming off there as well is going to be where the supply is going to be. So it's going to start there. I should draw a box. I'm not a big user of this technology here, but I'm going to. I hate it. It just bloody hangs on to the thing. Let me go extend. Right, they have changed this format here. So that's the supply zone. And we'll change that. There you go. I am pretty good at it. So that's, I think, our reward to risk, or our reward zone. We know that if we're entering around the current level, okay, and we would certainly, I think beneath that candle's low, we're managing risk, but also, and it's just snapping to points there, so I have to move them, but certainly down there. So easily 1-to-1 on the basis of reward to risk, but it is an uber aggressive setup because take out these candles, it was in real trouble. So it's not like it had that great price action, that great demand side. Now this has changed stuff. That candle's amazing. That's a great follow. That gives me great heart that it is turning the corner, but there could be better stuff even than that. But I agree, it is an aggressive setup for a long. Okay, let's keep moving, and I think that's good. That's a good one to have because I think it's instructional for other people in understanding how that aggressive setup works, because we don't see them that often. DB, Deutsche Bank, which is far from an aggressive setup. That is nothing but continuation. And this one here is for, who always asks? Perry. Actually, somebody else was asking about Deutsche Bank not that long ago. So Perry is asking this time, but I want to give somebody else the credit of that one and a few before. I'm not sure. Maybe it's Adonis. I think Adonis is doing thumbs up, so Adonis might be taking credit for that one. I think it might have been him. FRP plus 1/3. That's very, very simple. That's an amazing chart. Let's go to BAP. Which is Credit Corp here, which looks almost as good. It looks very good, but I mean, that Deutsche Bank chart is exemplary. This one is very, very strong, don't get me wrong. I'm just pausing to try and find my writing tool there. FRP, if you've got it, plus 1/3. If you're not looking if you're looking for risk, then this is certainly one I think you need to consider, and I don't think we're going to find anything sinister out there, and we're not. So let's keep moving. And all that indecision I had about Aussie stocks are a distant memory over here in the USA. ALNY is Perry's next one, Aluminium. Alnilam Pharmaceuticals, and this is, I'm so glad this one's come up because there's the big white candle that Perry's probably given it to us on that day as well. And you probably on that day thought, well, I'm not going to buy that because it's gone up too much. And you would have missed out on probably one of the easier trades of the year thus far. But it still looks just as good there, so pretty happy with that one. It deserves your consideration if you're looking to add risk. And LITE is Perry's final one, which is Liontown Holdings. And that is an absolute ripper of a chart also. And just wonderfully curated list that we get from Perry every week. He really does us a great favour and a great service, and they are just wonderful looking setups as far as I'm concerned. So very happy with those, and thank you again. Perry, clicking save, 4 out of 4. Really great looking charts. Heading back up the list, just looking for the US ones now, and I must remember to do that RRL for Alan. And I think we're pretty good, and I know Adonis usually sets us off on our US list, so I think we're okay now. CSCO, Cisco Systems, which is looking good. I think you asked us about this one last week, Adonis, so great to see that one's turning out for you. It looks very, very good now, and it looked good last week too, but it looks even better now, so there you go, plus 1/3. On that one for everybody else, if you're looking for risk, then certainly I think that deserves your consideration. Let me just look out the corner of our eye there, and that's it's blue sky, makes it even better as far as I'm concerned. And the reason why we're not seeing these is because I'm in the wrong format. I should be in that layout. And when we get to CSCO, that's when we're going to see. I thought we'll see one of your things from last week, but anyway, we didn't. But I should have put all those saved ones I should have put in here because we want to see them next time. MO, which is Altria Group, very, very solid again. And we'll go on the weekly chart, and there's nothing there, so it's just blue sky. And perfection, happy with that one. FRP plus 1/3. So basically, I don't do shortlist for you of US stocks every day like I do for Australia. That's more of a time thing than anything else. I would like to do it if I had a little bit more time, but maybe that's in a future scenario. Let's keep going and finish this one off with AAPL. Looking good again, got itself back above that line. I don't mind it. I think you're going to find better setups. It's a little bit like that other one where it's come good on the basis that the rest of the market just came good. Because prior to that, it definitely had some issues, and my concern is that it starts to have issues again. But on the face of the last few candles there, it's got itself back into the right place. But what I'm trying to say is when we compare and contrast setups, when we get to the end of them, if we're not looking at this in isolation, then some of these other ones might cause this one to fall a little bit by the wayside. And this is where I get frustrated with this thing here. NFLX. Yes, what did we say last time? Oh, we said ZRP. Okay, there you go. ZRP on that one. Well, now we're going to have to potentially add some risk back in. It's not far away from it, but I'm still probably thinking a little dink, just a little dink on the next. Yeah, no, that's not me. I don't do those, but price action, that's what I want to see. Yeah. So we've got 2.5 white candles. That's literally what we've got. So we've got 20 black ones. And we've got 2.5 white ones. So now, this could have just turned the corner and it could be on its way to 2,000. But before it can get to 2,000, it needs to have a supply side response. So we know there was supply in the system. We know for 20 days straight, they were bashing away at it. That doesn't mean they can keep doing that forever, right? We know it's a long-term uptrend. We know the long-term traders at some stage are going to come back in and do something about it. We expect them to do it here, but that doesn't mean they can't also do it here, right? There's no rule that says that it has to come back to the dark green zone. So we've seen the demand side come in. They're making a bit of an impact on the market, which they haven't really done for about 20 days. That's good. It tells us they are there, but the supply side is still lurking. And we want to see how they respond. So if the supply side's got nothing, you'll see white candles. You might not get a dink, but we'll see a little bit more of a response. And I don't need a whole lot more, but I do want to see that test. I want to see the demand side tested and succeed, and then I can have another go at that. But yeah, I mean, we're talking, if we give this overall a score out of 10, it's probably, like a 6.5 or 7 out of 10 at this stage. You put the dink in, and that's putting it up to sort of an 8 out of 10 at least, isn't it? And we compare it to some of those ones that Perry had, which are just clear demand side control. So it's just, 10 is complete demand side control. 6 is better than, the demands on top of things still, but supply side is threatening, and that's probably what we're seeing here. And just 5 is equilibrium, 50-50. 0 is total supply side control. So we should be able to assign to every chart we look at a number there, and if that's the basis on which, when we get to the end of discovering all our setups for the day, how we rank and then take our trades, I think that's a good way to do it as well. So nothing by definition therefore is a hard no, is it? It's just degrees of demand side and or supply side control, and this is showing signs of demand side coming back in, but we want to see a little bit more confirmation in that regard. Let us keep going. One more, COST in the US anyway, Costco, the big US retailer, and there you go. So that one is a little bit more traditionally hitting that zone, bouncing back out of the zone, but it's also, look how many black candles there are. So it's had 30 black candles and six white ones. We know the supply side have been active. There's something about this stock that they're cranky about. There's something they don't like, and all of a sudden the demand side's had a crack at them. Demand side's overwhelmed them. How do they respond? Does the supply side have ammunition, in reserve, or that's it? They're exhausted, and that's what this little. It's such a silly little term, isn't it? This flippant little term, this word dink that we use. I mean, what the hell is a dink? But I think a lot of us have seen how effective that dink is in helping us understand the taking of control, the confirmation of that taking of control in these 50-50 situations. Thank you, Adonis, for those. I must fulfil my promise to Alan and head back here. And if you do need to go, then please do. But Alan had a really good question that wasn't about risk positions. It was just about points of supply, and how do you determine them, and what do you make of them ex post after they've been, consumed. So he mentioned these 2 points of supply here on RRL, and as a point of supply, that's a point in the past where supply has overwhelmed the demand side. Okay, it's another word for that is it's a peak. So we have higher highs and higher lows heading on into the left, and then we have lower highs and lower lows, and that would be there and there and there. And I've still got that indicator. It's fallen by the wayside, hasn't it? The one that I was working on that draws these for you on TradingView. Only so many hours in the day, unfortunately, but it does play on my mind, and I do want to finish it for you. And I will. I promise I will at one stage. Okay, so points of supply. What's a major point of supply? That was the other thing he had in his email, and he didn't have the right interpretation. So I want to clarify what a major point of supply is. Now, this one is a major point of supply, and yet this one is more of a minor one. And I wonder if you can tell how you tell them apart. And there is a rule, and the major point of supply has this zigzag up on its left and it's zigzag down on its left, and just a regular one won't have that. Okay, so this one just has, there's no zigzag on its left, no zigzag on its right, so it's just a regular one. So this one is more important because it has, that rising and falling peaks beneath it. Either way, clearly, this area here at $5, lo and behold, there you go. I didn't even see that. So of course, it turns out that way sometimes. Let me do it this way. There we go. $5 turned out to be a major point of supply. That's no surprise to anybody listening tonight. We come back, we test it. We've talked so many times in these sessions about the fact that you think of it as a brick wall, and each time we hit that level, we weaken that wall. We remove some of the mortar, some of the bricks fall off, so that the next time we hit it, it's easier to get through. And that time there, with the close above, we say that those points of supply have been consumed, literally consumed by the market, or the excess supply at them has been consumed by the market. In theory, they should now begin to act as a point of demand. And the bigger the point of supply, the more of a point of demand, in theory, they should behave as. Okay, so up we go, get through. And even then, it took a few days to get through. But all those candles were very good. Up we go. We print a candle. That's not ideal, but certainly not a deal breaker. I think by that candle, all of us are starting to get quite concerned because we've got confirmation of supply. Is that enough to push you out of a trade? I think you'd have to be really jittery, all things being equal, to jump on that day. But if you knocked a third for your peace of mind, I would not complain. And certainly on that day, we all know we've got to do something with our risk levels. We can't carry a full risk position after that. Why did that happen? I don't bloody know. Maybe there was some news. Maybe the price of gold fell out of bed. It doesn't matter. The point is that when that demand is now consumed, because we really want this, or we expect it to, act as a zone of demand, right, going forward. So let's change the colour of that to a green. And when we close beneath that zone, we have to assume that the demand that was there has been consumed. Okay, so that's also not ideal either. That's another reason potentially to be more aggressive at reducing our risk at that level. Now, the question that Alan had is, what is the significance of these points of supply going forward? So the first significance is before they're consumed. Before they're consumed, they're points of supply. After they're consumed, we're expecting them to act as a point of demand. Okay. Once that demand is consumed, that's it. They are null and void. They have no importance going forward. And that's Alan's question. Is like, do I still need to be watching out for them? Are they going to play any role? And they may, but if it is, it's pure coincidence and therefore not really. It's not really part of my system or my modelling. That demand, that supply and demand has been dealt with, and we're going to make new areas after that. Okay. And I don't think this one actually does, even by coincidence, interact with that area again. It kind of does its own thing after that, but hopefully that is an interesting little case study there in how they're formed and their definitions and then their significance going forward. And that is all of us satisfied. I hope everybody's questions got answered there. Let's head back to the disclaimer, of course, that's what it's called, and to say that everything we've talked about tonight is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So, of course, before you act upon it, consider it carefully or seek the help of a financial professional. You could lose money. We saw a few people tonight on the wrong side of trades, and that's going to happen to you if you're going to trade, unfortunately. Hopefully, that you're on the right side of enough of them too. Either way, you're responsible for the stuff you do, not me. On that cheery note, it has been an absolute pleasure chatting with you this evening. Hopefully you enjoyed it and got lots out of it. I certainly enjoyed chatting with you. All the best for your trading and investing. Till catch up again. Bye-bye for now.